you and your investors, what are you guys thinking? What is your strategy in investing today, and why? Welcome, everybody. I know some of you have requested to get this report. This is an exclusive report that we do once a month, and it's looking into the market in detail and trying to make sense of what's going to happen in the future by looking at the past and going beyond the headlines and trying to provide clear pictures and trends and patterns that are happening in the market today. So I want to start off talking about the May the market in May and kind of the trends that have, that we've seen since 2011, so the 10-year trend. And you could see that, at 11,950 sales, these numbers for the May market are definitely the highest in the last 4 years. They were the only year that was higher than that was in 2016 when we were building up to what happened in 2017. So it's as you can see that the sales have dropped in. Or you don't see that here, but we're going to go into the next chart. You're going to see that the sales have dropped down by 7% in June, and June 2021 is actually 11,106 sales, which we've talked about in the previous session. Talking about how that drop is maybe a move towards normalcy versus a major red flag that we need to be concerned about. Let's look at June now, and these are the numbers for June. This is June going back to 2016, and you'll see that even June is the same as May. It's also a record-breaking month, highest in the last 4 years. Was higher in 2016 again, 17% increase in price from last year. That is massive. That's an average increase in price, and average price today is at $1,085,000. And again, active listings very, very low, sitting at a monthly inventory of 1.02. Look at the inventory that we've had in the past, and look at where we're at right now. I mean, that's a trend. That's a trend that we're going to see even more closely in the next slide when we start to see how the inventory has been acting in the last 10 years. So here's the chart, as I was saying. And if we look at the inventory, the title says the market is predicated on inventory, because right now, with the fact that we have a inventory problem where there is not enough supply to deal with the demand, the inventory is what controls the market. And when we go into these really, really low inventory marks under the 1 months of inventory, as you can see from the graph, that's only happened maybe around 4 times. If you take the line at number 1 and you go across the intersection, there's around maybe 4 times where that line intersects with the actual graph. When the inventory goes down that low, that's a clear indication that price is going to go up, or that price is definitely not going to go down, right? Because there is the tension between demand and supply is favoring a very powerful market, or a strong market. So again, the balanced market sits between 2 to 3 months of inventory, and you can see a very interesting pattern. If we go back to 2012 and to 2017, you'll see that year over year, that pattern seems to shift downwards and more downwards and more downwards, from around the threshold of 4% down to 3, down to 2, down to 1. And now this is the reality. The reality of the region is that we are in an environment where we're constantly dealing with a supply problem. And that kind of predicates what's going to happen in the next 5 to 10 years, especially with the increase in immigration, as Brian was talking about in the previous session. So if we look at the last 10-year summary, there's a bit of a whiplash that was experienced between 2020 to 2021. You'll see that we went from almost the highest months of inventory at 3.6 that we've experienced in the last 10 years to one of the lowest months of inventory that we experienced which was around 0.7. And that whiplash is, you know, was a result of COVID, and the effects that being isolated and not being able to go out and not being able to see had caused the market. And I think one thing to know is that this is very unprecedented times, and nobody really does have a crystal ball, and we don't know what's going to happen. But we do see that certain indicators right now, as we have slowly gone from the beginning of COVID until now, we're kind of in a place where we're finding our balance. We're finding our place of normalcy, right? I'm going to talk a little bit about price, but Brian, before I go into price, is there anything you wanna mention on the demand and the supply that we've talked about?
I again, right, like this, when you go beyond the headlines, that's when things start to make sense of you know, I mean, I'm sure you remember a few months after COVID, right? First, everyone was, oh my God, the sky is falling, real estate is plummeting. And then all of a sudden things started to take off. And everyone was doing one of these and going, what on earth? How could we be in the middle of a global pandemic and yet the real estate market is taking off? And it's only by getting real data, analyzing that data, looking back at what happened. And we're not talking about going back, you know, 2-3 years. We can go back a month or two. Then we're able to make sense of what was going on. And that we can then use in our decisions, in our choices about what to do over the next few months. We can look for patterns. We can look for, has this happened in the past? And if it has, how did it flesh out the last time? Or at least try to mitigate that risk, right? We talked about this is investing smarter with less risk, right? So how can we then mitigate for the potential risk and yet still move forward, still get into the real estate market? So, you know, I mean, this is why, Omar, after more than a year, you and I are still doing stuff like this, still trying to bring this data to people, because this is how decisions should be made, not from emotions and headlines.
I can't agree more with you. And I know that, you know, you are a data guy and you look into this stuff before you make your investments. And that's how you make smart decisions. Absolutely. Let's take a look at price. And first thing people will say when they look at this chart, they'll be like, oh my God, we went down from 33% to 28%. That's, you know, the market's going to crash. You know, the sky is falling, like you said, Brian. But what this actually means is that right now we're 28.4% higher than last year. That's what this graph is saying. We're, you know, the 0% mark, as you guys can see, the 0% mark is that line. And you'll notice that the entire graph is above that, except for a very small section that happened between 2017 and 2018, right? That's the Canadian marketplace. So I love this chart because it kind of really paints a really clear picture of what is actually happening. And this is for people who are interested, this is the year-over-year change. So this is how we're doing in comparison to the year before. Now, I think it'll be good for us to start looking at, you know, the 1 year monthly breakdown, and then we're going to explore the different types of properties as well. Looking at this chart here, this is again the 10-year, the numbers for everybody who likes to look at the numbers. Sorry, not the 10-year, the 1 year breakdown, and you can see how the prices have progressed from June 2020. We were at 890,000. Average price, and now we're sitting at 1,089,000. With the days of the market, you can see that a very interesting fact is that June actually has lower days on the market. If you look for 13 days on the market, it's lower than May, and it's around the same as April. So you can see equalization, you can see some dampening, and you can see some kind of balance that's going on, where the prices are going up and then they're going down and they're going back up, and then that kind of like trying to find the new reality mark. So let's take a look at the different types of properties. Let's take a look at the detached, semi, and condo market. And I think that chart is an amazing chart because I wanted to focus most on this chart is the gap between these three lines, and where we're at today and where we were in 2019. And I just ran some numbers, and just to give some people more perspective, the average detached price is around 1.5 times the average semi or row price, at 937 to 1,400,000. And an average semi is around 1.3 times the price of an average condo price. This distribution has changed, and it's actually condo to detach. That gap between condo to detach is the fastest growing gap in this graph. And what does that really tell us is when things go back to normal, either the detached market is going to have to adjust slightly downwards, or the condo market's going to have to adjust slightly upwards. And if I was a betting man, again, there's no crystal ball here. If I was a betting man, I would put my money on the condo market, as you had mentioned before, Brian. I think there's a profound opportunity that exists in the condo market. So if we go a little bit further and we start looking at the price points and how the price ranges, which price ranges have increased the most. This is the condo chart. This is a chart showing condos, and it's phenomenal. When I saw this chart, it definitely drew a new picture for me. The highest growing price range, when we compare May 2021 to February 2021, so that's a quarter before, is the $1 million mark and up. That's been the highest growing mark. So in the last quarter, we now see a lot more larger condos that are on the market sell. I think one thing I remember from 3 months ago is there was slight difficulty in selling these larger condos. And in today's market, we are seeing a substantial, almost a little over 30% increase in the number of sales that are happening in properties that are selling for over $1 million in condos. So let's take a deep dive now into the different regions in the detached market, and let's see what we can find here. One thing that's really interesting is that the Toronto region is showing faster growth in sales than the periphery areas. So you can see that underneath the Toronto West, Center, and East, that's the summary of all Toronto, and then you'll see the 905 region at the bottom. And the number of sales in Toronto are now starting to increase faster than the number of sales outside Toronto, which is a new trend that was predicted after COVID, when people tell you that, the demise of the urban or the demise of the downtown core, these numbers are showing the opposite story here. We're seeing that the downtown core is seeing the fastest growth in comparison to the 905 region today, right? And the periphery regions have enjoyed a higher or a faster growth in price than the Toronto region. If we move on the graph to the right side of the graph, you'll see that there was a 37.7 increase in price. There was only a 20.8 increase in price in the downtown core, or the Toronto region, even though the sales tell a different story. And what does that tell me, Brian? It tells me that there's a bit of lag between sales and price. We always see that. We always see growth in sales happen first and then followed slowly with growth in price. So definitely a trend that is now starting to increase and starting to become more prevalent. When we start to see more and more sales, we're going to start to see higher and higher prices. The Durham region was the winner when it came to the record low months of inventory. It is very difficult to buy in the Durham region right now. No, Brian.
I live in Durham, just so you know.
We're at a crazy 0.6 months of inventory. What that means is in less than half a month, you sell all the inventory on the market. That's how strong the market is in that area, and that's how low the level of inventory is. It's also the highest price growth, as you can see from the chart. The York region and the Halton region also superseded the Toronto West and the East, which is a phenomenon that is very unique, where York and Halton, it's now cheaper to buy property in York and Halton than it is to buy in Etobicoke and Scarborough, for instance. Now, just crazy new trends, a new reality in the market today. And then finally, we will take a quick look at the condo. It's a dive into the condo apartments and also in the 416 and the 905 regions. So the Toronto region showing slower growth than the periphery region. So, detached properties have done better than condo properties up until now. More and more people are choosing to come and buy downtown properties today because of the difference in price, the massive difference in price. It always used to be so much more expensive. Now, areas in the periphery are costing almost the same as buying in Etobicoke or buying in Scarborough or buying in downtown, right? So the condos have experienced something different. The condos are still experiencing lower growth, and still an opportunity that is going to be arising. The periphery regions enjoying almost more than 3 times the growth in price than Toronto regions. That is crazy. We're talking about 17% versus 6%. So, for those of you who had bought condos in Peel or in York or in Halton right at the middle of COVID, congratulations. That was a good decision. Where are you going to put your money now? That's the next question, right? And I think, as me and Brian have mentioned before, the prediction is that the downtown core is going to see the next crazy rise in prices. Durham region, again, the lowest recorded months of inventory and the highest price growth. Again, York region showing explosive growth in sales of almost 400%. 400%, 395% in number of sales. That's just insane. And double-digit increases in sales across the board, except in Toronto Centre, which is only 4.3. Again, where is the next growth going to be? These markets, these micro markets are all connected to each other. So when one goes up, it's inevitable that the other is going to go down, and then following the ones that have not gone up are going to experience the rise afterwards as the market continues to find its inner balance. Brian, what do you have to add here with you and your investors? What are you guys thinking? What is your strategy in investing today, and why?
Well, first of all, I just want to mention that Durham gets the Medal of Honor for the participation medal for its what it's done over the last little while. And as I said earlier, I live in Pickering, so I'm quite happy about that. So I mean, for me, Omar, again, right? Like, this just goes to highlight some of those things that we were talking about in some of our earlier talks and even in today. That slide you showed about the gap between single family homes and condos, right? And you said either single family homes has to come down or condos have to go up. I would say probably there's a combination of both there that's going to happen, right? But where we see the most dramatic potential for growth is that single family homes. People can't continue to be buying in that area. That's where you're seeing some of the slowdown, but a lot of that activity is going to start to move. So, I mean, that's definitely the areas that myself, a lot of my clients, a lot of my investment partners, we're starting to look into those areas again. And interestingly enough, I'm getting emails week after week about more condo projects coming on, right? And I hear everybody like, oh, isn't it going to be saturated? Well, you've just gone to demonstrate that absolutely not. We're nowhere close to a saturation point when it comes to housing in especially in the GTA, but even in other parts of Canada, right? There's so much more demand than there is for supply. I also wanted to, something that jumped into my mind when you showed that graph where there was the 10-year trend line. And we noticed if we looked at like the previous sort of 6 to 7 years, the line was really close to the trend line, right, of what was going on in real estate. And then we had that crazy 2017, it went down in the second half. And I just want to point out that the last sort of 4 to 5 years has been an unprecedented time in real estate. It used to be, right, and this was, you'll hear this from financial advisors, that real estate is, it's in the 3 to 5% range. It's, this kind of thing. It's not all that exciting. Look at these other investments instead. And we could see that it was right around the trend line. It was going up, but not that dramatically. We're in a very, very different situation, very unique, unprecedented opportunity right now. This is one of those times, whether you talk about the rise of the internet, what's going on in the crypto world, what's been going on in the real estate market over the past 5-6 years, especially in the GTA, is one of those things that people will look back on 20 years from now and be like, did you participate in that? Were you a part of that? And the sad part is the vast majority of people are going to go, oh, I wish I'd gotten in. And that's routinely what I get when I go to invest. Most, lay people that I meet think I'm crazy. And then 5 years later, they're like, oh, you were lucky. You got in when at the good time. Absolutely. Well, my friends, this is the good times, right? As in terms of what we're seeing from the data, the next few years should continue. Is there going to be volatility? Of course. I'm going to look for those crystal balls at Walmart for sure. I want to pick up a few of them. We're not saying that everything is for sure, but going by what we're seeing, looking at the data, talking with other smart professionals, this is helping me and my friends and colleagues decide on our investment choices going forward. And I expect to be in a situation in another 5 years where everybody's talking about how lucky I was, and it's about taking action.
Yeah, I just want to have I want to show, first of all, admiration to you, Brian, because you have that mindset that's constantly thinking about where is the next opportunity and how can I leverage? How can I take advantage of it? So for people like Brian, you want to participate, you want to partake in what's going to happen in the next few years, because why is this change in normalcy happen, or why is this change from the trend line happening? Is because of the problem that we've reached where there isn't enough supply today, and that's why we're seeing these fluctuations, because we've hit that threshold. But the good news is, all it takes for you is to buy a property once, and you will enjoy these advantages, right? You will really get to, what I tell all my clients is, you buy one property, now you're floating with the market. Now you're taking advantage. The market improves, you're enjoying the advantage. You don't have to stress, you don't have to worry. All you got to do is just, enjoy your property where you live, pay the bills, and you're good. And you're enjoying the ebbs and flows. And it's a long-term process. But for those investors, you're looking for timing. And it's more and more important for you to look into these assessments, the numbers, what's happening, the trends. And we love looking at trends. We love looking at numbers. So I welcome inquiries. I welcome challenges. I welcome questions and theories. I welcome all of that from everyone. I would love to connect with you guys. Feel free to reach out. And again, take advantage of Brian. Brian is a marvelous resource with his courses in pre-construction. When are your courses starting, Brian?
So my next pre-con course looks like it's going to be getting going in August, just starting to promote that. So sort of, end of August, beginning of September sort of time range. I will be doing another one for just general investing, probably in the fall, September, October. But that's sort of the timelines of what. So it's perfect timing if people want to reach out and ask questions and that. And exactly like Omar said, 17 years ago, my first real estate investment was my first one property, $11,000, 5% down. I moved in and lived up and rented it down. That was my very first investment. It doesn't take $1 million to get started. It just takes action on your part. And that's it. It just snowballed from there.
Yep. Thank you, guys. I hope that you found this to be valuable. We are always thinking about how we can offer more value and teach you more about the market. And I hope you guys have a great month. And until we meet again next month.